Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today.
Good morning. It's Thursday, February 12th, and this is your New York Open Prep. Two things set the tone today: a U.S. labor market that's still cooling without cracking, and a fresh round of policy and trade jitters from Europe to North America. While in currencies, the Australian dollar is firm, and the yen is quietly regaining ground. On the U.S. side, weekly jobless claims eased to a still low level, a reminder that companies aren't rushing to lay off workers, even as hiring slows. RBC Economics says the Federal Reserve's policy looks steady around a neutral setting, with only minor tweaks to the outlook. The read-through: modest support for risk appetite and a slightly softer dollar into the open. In the UK, growth ended 2025 barely above stall speed, just 0.1% in the fourth quarter. But the message from both officials and banks is better ahead, with the Chancellor flagging stronger growth this year and Nomura looking for improvement in 2026 and beyond. Sterling has held its footing, and euro sterling is little moved as attention shifts to upcoming euro area data. Europe's competitiveness debate is front and center. EU leaders are weighing a buy European tilt to bolster industry, even as tariff costs bite. Mercedes warned its profits more than halved last year, with about $1.2 billion attributed to tariffs. Across the Atlantic, Washington's wrangling over tariffs on Canada underscores that North American trade policy remains an open risk, a theme also echoed in Canadian market chatter about the coming review of the Regional Trade Pact. In Asia-Pacific, Australia's dollar is trading near recent highs as inflation expectations stay elevated and the central bank keeps the door open to further hikes if price pressures prove sticky. And in Japan, Rabobank sees scope for a gradual yen recovery as investors reassess assumptions about fiscal and monetary policy, potentially easing the pressure on the Bank of Japan to remain ultra-dovish. Turning to markets and sectors, the mix of low U.S. layoffs and a steady Fed backdrop is supportive for equities at the margin and tends to weigh a bit on the dollar. Autos remain under pressure from trade frictions, while AI's supply chain story is shifting attention to the molecules and powders that feed chips and old-line industry alike, a constructive narrative for select materials and specialty chemicals rather than software. Looking ahead, it's a quiet calendar into the U.S. session. Policy headlines and any trade developments are likely to steer intraday sentiment. You should be watching the Aussie dollar against the US dollar, looking for an uptrend if Australian inflation expectations and the central bank's hawkish tone persist. Keep an eye on dollar-yen for a gentle downtrend as the yen firms on shifting Japanese policy expectations. Dollar Canada may stay range-bound, but trade headlines and a slightly more patient Bank of Canada stance could tilt risks toward a firmer US dollar on spikes. Euro sterling looks stable for now, with UK softness balanced by European policy talk. The takeaway: markets are leaning constructive on growth stabilization, but trade policy and industrial strategy are back in the driver's seat.
That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.